Welcome back to our channel. Today, we're going to discuss something very important because it affects me, you, our money, our investment, and our lives. Let's begin. Have you ever wondered how decisions made by the Federal Reserve affect your favorite cryptocurrencies? Briefly, let's explain what Federal Reserve is and its role in setting interest rates. The Federal Reserve, also known as the Fed, is the central bank of the United States. Its primary role is to promote maximum employment and stable prices, as well as moderate long-term interest rates. These are their key responsibilities. 1. Monetary policy. The Fed sets interest rates and regulates the money supply through the monetary policy. 2. Bank regulation. The Fed oversees and regulates banks, thrifts, and other financial institutions to ensure their safety and soundness. 3. Financial stability. The Fed works to maintain stability in the financial system and mitigate systemic risk. 4. Currency management. The Fed is responsible for managing the nation's currency, including issuing new currency and removing damaged currency from circulation. Now, let us dive in setting interest rates. The Federal Reserve sets interest rates through its monetary policy decisions, which are made by the Federal Open Market Committee, or FOMC. The FOMC meets 8 times a year to discuss and set interest rates. The Fed uses 3 main tools to implement monetary policy. 1. Federal funds rate, the interest rate at which banks and other depository institutions lend and borrow money from each other overnight. 2. Open market operations. The Fed buys or sells government securities on the open market to increase or decrease the money supply and influence interest rates. 3. Reserve requirements. The Fed sets the minimum amount of reserves that banks must hold against deposits, which can affect the amount of money available for lending. When the Fed lowers interest rates, it can stimulate economic growth by making borrowing cheaper. Conversely, when it raises interest rates, it can slow down economic growth by making borrowing more expensive. I hope next time you are asked about Federal Reserve, you can explain and even tell us their role in setting interest rates. Clap for yourself. Going back to our question, how the Fed's interest rate decisions affect cryptocurrency. First up, increased liquidity. When the Fed cuts interest rates, there's more money flowing in the economy. Your local banks like Chase, Wells Fargo, Bank of America, Citibank, Capital, and the rest reduces their lending rates, therefore we are encouraged as citizens to borrow more. And many investors might turn to cryptocurrencies as an alternative investment to put their money. Next, we have the idea of a hedge against inflation. Lower rates can raise concerns about inflation. As more money circulates, it can decrease purchasing power. This is when Michael, Jake, Stephen, Lucy, Rhoda, and your whole household have money to spend on $500 worth of groceries, but Walmart, Costco, Tesco, Aldi reduces the quantity of groceries for the same amount. Why? Because there are few groceries against the orders coming in. So then many seek assets that can retain value, like Bitcoin, Ethereum, and other cryptocurrencies as a way to protect their wealth during these times. Risk appetite. Lower interest rates generally lead to lower returns on traditional savings, certificate of depositories, T-bills, T-bonds, T-notes, money market funds, and corporate bonds, and many more, pushing investors to seek higher returns elsewhere. Where? Somewhere attractive, more volatile, more yield, and crypto market is the place. This can lead to increased buying in the crypto market. Have you heard about the Australian student who became a millionaire with $1,000 by investing early in Bitcoins? There are many crazy stories with people making insane amount of money by just investing in Doge, Shiba, Pape, MAGA, and dog with an at. Has your appetite increased? Diversification. With changing market conditions and the traditional investment yield less, investors often reassess their portfolios and look for diversification opportunities. JP Morgan Chase was initially skeptical about cryptocurrency, but now holds a significant amount of Bitcoin ETF, developing JP Coin, and the interesting part, they allow the use of crypto as a collateral for loans. Institutions are diversifying their portfolio. Goldman Sachs, BlackRock, Morgan Stanley, Fidelity Investment, Tesla, Vanguard, to mention few. And Walmart uses blockchain technology to trace foodstuff from farm to shelf. Pfizer uses blockchain technology to track and manage their pharmaceutical inventories. Now, lastly, market sentiment. A rate cut often creates a positive vibe in the financial market, and this usually spills over into the crypto market. Happy financial times leads to buying pressure and leading to the prices of cryptocurrency skyrocketing, and this leads to speculative trading. Investors might engage in more speculative trading, looking for quick profits in the volatile crypto market. So, while a Fed interest rate cut can create a favorable environment for cryptocurrencies, remember that these markets can be unpredictable. Always do your research before investing. If you found this video helpful, don't forget to like and subscribe for more insights on the world of finance and cryptocurrency. Thanks for watching.